The euro in its ascent, where does it end, Stephen?
I think we're getting pretty close. I mean, I think the problem that you'd see it from the German data today is that it kind of feeds on itself. I mean, the story about the European economy strength, which goes back now quite some time, was built on two things. One was monetization, obviously very low interest rates. The second thing was the weak currency, and you've lost one of those. So I think that we're going to see in the second half of the year the data decelerate, possibly quite quickly. And I think over that period of time, particularly if the Fed is raising rates, the interest differential has already kind of leveled out. It narrowed the early part of the year. Now it's been actually quite stable, particularly at the short end for some time. I think I'd call it time here. I really
Does that stop the ECB in its tracks or not if the economy shows signs of slowing? Or do they just plough on with normalising monetary policy?
You put your finger on it. I mean, I think there are two issues for all central bankers at the moment. One is normalisation, in the sense that if we were at different levels of interest rates, there would be more flexibility, but we're not. In the ECB's case, we're at negative rates. So the gravity effect will be to sort of normalise back to zero. Other central banks are not quite at such extremes, but have that kind of problem. And the second is what I call legacy. The Fed, we're in the home straight for Janet Yellen. Draghi got 2 years to go, but I think he even will be mindful of what kind of legacy do you want to leave. And by letting monetary policy run at hot levels, let's use that terminology, for too long, and then hence in the longer term perspective, on your watch, inflation really picked up. Do you really want that as your legacy? So I think that is in the back of some of these people's minds as to how they play things out. So interest rates have only got one way to go, and that is higher.